Hey y'all, Jen Hernandez, Loan with Jen. Buying a home with student loans in 2021. There have been some changes, so you want to make sure to watch this video. Okay, we're back. Hey, please like, share, and subscribe before we get started. We release 2 videos a week. We've got over 300 videos in the library, so just to aid you in your home search for purchase or refinance. So thanks and share the love. Okay, buying a house in 2021 when you've got student loans. So the first thing I will say is if your student loans have gone into delinquency, they have to be out of delinquency before you can buy a home. So that's the very most important thing. If they're showing up in the collection area of your credit report, you definitely need to pay them on time for 6 months, and then the federal agency will get them into a non-collection status. So that's important, number one. Number two is you can buy a home with student loans. Lenders just have to count a payment. Even if you're in deferment, okay, the whole United States was in student loan deferment for a while, and some people still are, but even so, the lender has to count some type of repayment, even if you're in deferment, even if you're in a forbearance plan with student loans. So here's the rules on that. First, we'll go over conventional, and then we'll end with FHA. So if your loan is conventional, we use either or of the income-driven repayment that you've set up through the Student Loan Association, whoever services your loan, or if that's not in place, then we've got to use 0.5% of the principal balance. So if you owe $10,000, 0.5% is a $50 payment. Okay, so 1% of $10,000 would be $100, and so half of that is $50. So that's what we would count, okay? So on a conventional loan, again, just to repeat, either the IDR, income-driven repayment, or 0.5% of the loan balance, okay? So it's not either or, which is more favorable to you. Usually the IDR is more favorable, by the way, but we've got to get documentation of that. Now on an FHA loan, the rules are a little bit different. Even if there's an IDR in place, income-driven repayment, which many times is very, very low. We've had clients with IDRs of 0. There has to be a payment calculated using the 0.5% rule. So it doesn't matter that there's, again, an IDR in place. It's got to be a 0.5%. Now, if there's a higher amount showing on the credit report that's due monthly, then it's going to default to whatever's showing on the credit report. So FHA is a little less lenient on that. They used to be in a lot worse situation, so it has gotten better this year for FHA loans on the analysis of the student loan payment. So just to repeat, you've got to be out of delinquency. There can be you can't be in the collection arrears with the student loan. And the way that we calculate it is a little different on conventional than FHA. So I hope you found this video helpful. If you're in Texas, please call us. We'd love to advise you further. Talk to you soon. Legacy Mutual Mortgage is an equal housing opportunity lender. The opinions expressed here do not reflect those of Legacy Mutual Mortgage.